Good evening, everybody. Welcome to our webinar, How to Profit from the US-China Tech War. Okay, we just opened the room and there are many of you who are tuning in right now. Today we have overwhelming response with over 1,000 registrants on this webinar. We are very excited to be hosting you on this How to Profit from US-China Tech War. All right, good evening, everybody. Yes, thank you, T. Okay, our speaker is now on the line with us and he is getting ready to begin his subject today. And we also stream it live on Facebook today. So for people who are tuning in from Facebook, welcome to our webinar, How to Profit from the US-China Tech War. I'm sure that all of you here have already known that the escalation of tension between these two biggest economy from the shutdown of their embassy in Houston, as well as the Chinese embassy in Houston, as well as the US consulate in Chengdu. So now the escalation of tensions is happening. But is this all about trade? Or is it all about virus? Or is it all also partly because of technology? Okay, now today our speaker will share with you his view on this US-China tech war. Now, what we're going to cover today is we are going to talk about what are the trends to ride on the tech-driven new industrial revolutions. How did the US-China tech war come about? Why it matters to the US and China to win the lead? Discover the strengths and weaknesses of both US and China, and which companies and industry will be the beneficiaries in the US and China tech war. Now, who do you think will win? Okay, do you think US will win in this race, or do you think China will win in this race? Okay, let me know in the comments so that we can see what is the majority feeling about that. Now, disclaimer: whatever we share in this webinar is only for educational purpose. In no way that I give any buy or sell signal to any stocks that we cover. So, if you decide to buy or sell any companies, you do it at your own risk. Okay. Now, allow me to introduce our speaker today, P.C. Wong. He graduated from National University of Singapore in 1989. He has more than 27 years of working experience with several publicly listed and multinational companies. He is the author of Invest in Foreign Shares, which reached Popular's top 10 non-fiction bestseller in August 2014, Invest in REITs, and Global Economic Collapse, which is his third book. He is a full-time investor, author, trainer, have been investing in Bursa and international markets since 1995. So when I met him, I know that this speaker is really a very depth, very deep. Okay, he from what I know about him, he reads about the economy news every day, and while he's listening to podcasts. Okay. So he may be working on his desk to see the news, to see the geopolitics, okay, different markets. At the same time, he's also listening to podcasts. Okay, so he is a lot of info. Okay, walking dictionary in terms of global economic events. So he is also invited speaker by Bursa Malaysia, as well as many investment banks such as UOB, Hong Leong Investment Bank, RHB Kenanga, and Inter-Pacific Securities to train their retail clients in investing. And also appear on several media and featured in a column in the Sinchu Finance segment. So that is a little bit about our speaker. So he is author of 3 books. And without further ado, let me hand it over to you, PC, for you to start the session. So you may start sharing your screen right now.
Hi, Chun Sen, thank you for the introduction, and thank you all who are tuning in. So today our topic would be on the US and China tech war, but let us start by understanding the new industrial revolution. Hold on. Now, the new industrial revolution is often referred to as the fourth industrial revolution. Better performance chips and increase in computer storage capacity has resulted in machines adopting artificial intelligence, AI, with self-learning capabilities and abilities to interpret data beyond the capacity of normal human beings. Now, big data and cloud computing have become mainstream as companies become data-centric to improve their efficiency and cost effectiveness. Combined with AI, it gives the company an edge over competitors. So that's why in recent times, we see that there's a lot of companies moving towards integrating their computers and data collection to a cloud-based system and collection of big data using AI to interpret. So as demand for computing power increases, scientists are accelerating the development in quantum computing. Not restricted to only chips and computers, machines too have evolved. New generation of vehicles will be self-driving and drones will become ever more important in a variety of functions besides surveillance and military. Right now, there are a lot of experiments being done to have drones that can carry passengers in cities. Yeah. So, but the technology has still not been able to be applied in the real world. Just currently, most are just tests conducted by various companies. Now, the next generation of drones, as I mentioned, may be even to ferry passengers. Robotics with AI assistance can now be self-learning, helping manufacturers to troubleshoot problems with little human intervention. In material science, nanotech will be employed to strengthen the performance of materials, and even in medicine where it is being used as a medium to deliver drugs. Genetic engineering will break new grounds which could put an end to many life-threatening diseases. A company in China is even looking at cloning organs for transplant. Now, this particular company, being in China, of course, there's no hindrance or imposition of restriction because of religious issues. So this company has the freedom to explore a lot of science related to genetic engineering, as well as understanding the genetic sequences. And in the era of 5G network, enhanced connectivity allows for actions that can be performed remotely. On 18 March 2019, a doctor in China performs the first 5G-based remote surgery on a human brain. The emergence of IoT, Internet of Things, has enabled computer-embedded devices to send and receive data, providing a myriad of possible applications from industrial use to ordinary household use. This we can see that in certain household, all their major electronic devices are integrated and controlled via a mobile device. All these developing technologies and those which have yet to be developed will push mankind towards the next economic frontier, and that is space. Now let's look at how the Industrial Revolution actually involved all the major segments of the various industries. Now, central to it all is the AI, which enhances problem solving and diagnosis, okay, where it helps industrial and business to process industrial business processes, as well as helping them in their R&D. So, for example, they perform R&D and then it's sent to the AI for diagnosis or to solve any outstanding problem, and then it's back to the business and industries to adapt or adopt the processes. Then it leads to improved efficiency, cost savings, accuracy, and high performance in the product or in the type of service being offered. For example, there's one particular company in US. It is adopting AI to have all the accounting and finance within the requirements of the regulatories and authorities. Is being managed by AI, and then people log in, and then they can use the software for their accounting. And if there's any problem, they type in a question, which then the AI would actually send back, how to overcome the problems and such. So it actually through that means a lot of accountants are being put off. Okay, that's you don't require actually an accountant anymore, or even those people who help in the tax consultancy, because all is being managed by your finances, as well as the tax filing is all managed by the service provider. Okay, so that leads to a lot of cost savings for companies and as well as for the individual itself. So this leads to better products and services. Now then it goes to the consumer and client, okay, where according to their behavior and needs, it all goes back to the big data. So sometimes it goes to the client or the consumer. They may not like the product, or there are certain comments, and then it goes back to the cloud and supercomputer to manage the data, flow back to AI, and then they diagnose what actually went wrong, why the customer do not accept a particular product, or why when a product has certain fault in it, and what kind of remedy. So if the consumer and client have acceptance, it does not only stop there. So then all the spending that the consumer or client does, it goes back to the big data again. But only this time, it's not about defects or product or services that are inefficient, but rather collection of their behavior in spending, behavior in using the tools, or behavior in the way that they manage their affairs. Okay, for example, why I say in the way we manage our affairs. For example, if you are driving, okay, you are nearby a location, immediately, okay, it prompts in your base what restaurant is available. Okay, so this is how AI is managing your affairs as well, by giving you suggestions. Okay, or even in Facebook, or even in YouTube, once you view a certain content, okay, or you view a certain service that is advertised in Facebook, then similar services and content will become recommendations in your Facebook as well as in the YouTube. So that is how all this is being managed by big data and AI through the processing power of the supercomputer and the storage capacity of the cloud. So overall, this is how the Industrial Revolution 4.0 behaves. So how the trade war became a tech war. Now, originally, the trade war has everything to do with the trade deficit. Okay, if we follow Trump's earlier campaign, he always mentioned about the trade deficit. He's going to impose tariffs on China because, according to the US, China is stealing American jobs. Of course, all this has to do with US corporations, through the means of globalization, have actually outsourced many manufacturing jobs from the US to China. And because of that, it incurs the wrath of Americans. So China didn't steal the job from the US citizens, but rather US corporations bring the job to China. But in a lot of US election and all those, you will realize that they will always want to have an enemy to focus on. During the Hillary and Trump elections, Hillary was focusing on Russia as being the boogeyman. Okay. Whereas now in the coming elections, China becomes the boogeyman. So all this have to do a lot of failings within the various US administration previously because of their high debt, their huge trade deficit, and their huge budget deficit. So when you focus on the external factors as the harbinger of misery in the US, then it could whip up support. So always in US elections, you will see that they will raise tensions with not only with Russia or China, but in against Iran as well, or Venezuela, or even their allies in the EU, saying that the EU is not allowing more American products to go into the trading bloc. Yeah, but things started to change because in 2018 there was a white paper from the NSA and Pentagon, which has identified China as a greatest threat to US hegemony and challenge to US dominance in the world. So the US is very particular about their dominance in the world. Okay, to them that is the most single essential thing that allows the US to expand its financial power as well as military power. And military power is nothing when there's no financial power. Okay, and financial power comes from a very robust economy. And why is it a threat? Because it is expected that by 2030, China's economy will surpass the US. And by 2035, based on existing percentage of spending in the military, China's military spending will exceed the US. And this has put the US on the defensive. So it all boils down to the US viewing China as challenging its dominance in the world. And historians often refer to this as the Thucydides trap, where an existing superpower or presiding superpower will have competition with a rising superpower. And often it will lead to war. Okay, it has happened since the days of the Roman Empire. And until today, we seldom see that transition from one power to the other. For example, if we go back to the 16th century, the world power is actually the Dutch, okay, with them, bringing the spices from Southeast Asia and East Indies to Europe. Then, after the Dutch, came the British. And during the British rule of the 18th century, they were also competing with another country, the Spanish. Okay, and then later on, there's always friction between UK and Spain, and eventually it led to war. And then you have all the famous pirates in the Caribbean that actually keeps on attacking the Spanish Armada from South America with their gold from the South America, which is going to be delivered to Spain. So it all goes on, okay? And that is why this is the most worrying part. Now, the trade war then eventually morphed into the following: curbing China's rapid advancement in technology and military expansion. And that is why you see that the US is looking at all possible avenues to push China or to paint China and control the narrative that China, okay, is a threat to the world. And that comes from the Huawei being a tool for the Chinese government to spy on the users. Not forgetting that, Apple, Facebook, Google, all these have backdoors to the NSA, which they allow them to spy on other people. So calling China a spy, it may be true, but then it's no different, than the US, becoming a spy itself. It is like it is like a pot calling the kettle black. Okay, then stalling the Belt and Road Initiative, which could form the world's largest trading bloc. Now, the Belt and Road Initiative is very important to China because China only have one sea frontage, and that is the South China Sea. It goes back to the days of the Opium War, where the British created a blockade and prevent trade ships from Southeast Asia and from other parts of the world from reaching to China. And that is why China needs the Belt and Road, because that is its way to move the goods from Europe as well as from the Middle East to China, and China selling their goods to Europe as well as to Iran. Now, the latest deal with, between China and Iran is the $400 billion deal with Iran, whereby China would spend $280 billion to develop the oil and gas and petrochemical industry in Iran. Sorry, $280 billion will be used to spend on building infrastructure in Iran, and $120 million to develop the oil and gas industry and petrochemical industries, so that China would have, by then, oil and gas from Iran as well as from Russia. And they no need to rely, from other US allies like Saudi Arabia, okay, to get their oil. And even more, they do not require the oil from the US. On top of that, the Belt and Road Initiative allows China to trade with various countries using the local currencies and moving away from the US dollar. Now, China already anticipated that this kind of geopolitical crisis would actually happen. And way back when the US removed itself from the US gold standard, by a few years, I think in the 1980s, the Chinese PBOC governor then already said that it is a serious mistake and it will lead to more problems in the future. And right now, US is weaponizing the US dollar, even against politicians in China and Hong Kong, who they deem as, infringing on the freedom and rights of the democracy movement. So China will anticipate that eventually things could get such a situation, and that is why you can see that China has already its own cross-border international payment system called CHIPS, as well as China is testing the digital yuan in Shenzhen to see how it performs before using that, because it's a form of cryptocurrency, using that to perform transaction, most notably with countries which the US has sanctioned, and because it's all away from the prying eyes of the Five Eyes nation. So that's why to China, the Belt and Road Initiative is something for it to shift away from the US dollar as well. And that's why for the US, because it is bringing countries together to a large trading bloc, because the Belt and Road does not stop in Middle East, it goes all the way into Africa. So then you have, three major continents, Europe, Africa, and China, all connected by land, and therefore creating a large trading bloc. But the US does not want to participate in the Belt and Road. Rather, they keep on coming up with narratives that it is a financial colonization. Now, again, financial colonization does not start with China, even if so. But what happened with the huge amount of debt that countries own the IMF is also a form of financial colonization. And IMF is spearheaded by the US. Okay, so it's just like both sides want to have a say, but one side wants to have the only say. Okay, and that's why all the frictions are now surfacing. Then the other is to delay China's progress to achieve Made in China 2025. Now, the Made in China 2025 is a calling on the citizens and corporations in China to move China ahead by 2025 by reducing the reliance on Western technology. And that is why you see there's a surge of technology growth in China. And right now, the triangle of Shenzhen, Guangzhou, and Zhuhai has become the triangle of technology growth in China. Okay, and because if China really reached that level, then they would compete with US companies for the global market. And that is why US immediately shut down all the avenues for China's growing technology companies to access the most important product, which are the semiconductors and microchips. And that is also to shut down, large tech companies like Huawei and also DJI. Now, DJI is the world largest. It's not listed. It is a private company. It's the world largest seller of drones, okay, in the world. And the US find that a lot of Chinese companies are making headway into the technology world. And that's why they want to shut them down before they can grow even bigger and pose a challenge to US companies. The other is preventing China from achieving global dominance in trade and achieving her African ambitions. Okay, so that is why China is very much involved in Africa. No doubt, China's investment in Africa comes with a lot of conditions. Okay, China is building the infrastructure in Africa, but then China also want the nations to reciprocate in terms of giving them access to the rich resource in Africa. That's why you see a lot of Chinese companies managing mines, copper mines in Congo, managing gold mines in managing platinum mines in Zambia, okay, and then having a presence in Ethiopia, as Somalia, as well as Djibouti, where the Chinese, where Djibouti Chinese actually have a military base here to monitor the piracy in the Sea of Eden. So China's presence in Africa is very, very strong. And because China right now is, a lot of times people comment that, China is cheap labor and all those. Now, these are from very ignorant people. In fact, salary in China has gone up so much that China needs another place to manufacture its products. And Africa is the right source. That's why you see a lot of Chinese manufacturing is moving to Africa, especially in Ethiopia, where they have built large industrial parks. And they have also built railway transportation system in Ethiopia. Because Ethiopia is on the Indian Ocean and therefore allow the ports to make shipments from the eastern side of Africa to China. So that is why China is actually moving up the value chain rather than still paying cheap for the cheap labor cost. In fact, a lot of the for example, when there was certain tariffs and tariffs being implemented, China moved their manufacturing into Indonesia. So when the product itself, when it's manufactured, will be made in Indonesia, but then the material, for example, for a clothing brand, okay, the zippers, the button, the cloth, the equipment will all come from China. So that is how China beat the system, okay? And that is why, it is very difficult to put a tariff on product in that manner because there's always will be some loopholes. So in this regard, Washington believes that curbing China access to US technology will impair and set back China's own technology development and rise, plus retarding her growth and reduce the potential threat to the US. US has also indicated that she will restrict China's technology companies' access to US capital markets. Now, this is something that is will be quite difficult, yeah. Although right now they have banned pension funds from investing in Chinese companies, but then if you compare, when you compare the growth of technology and the US, both can be said are equals, okay? But if you restrict Chinese companies' access to US capital markets, China will actually double down, okay, and put more effort to develop its own. Now, just like during the early year 2000, when they have the global space station. China wanted to participate, but the Western nations say no. You can't involve in the development of the space station. But your people can access after we have, launched it and so forth. So China was pretty mad, and I think further down the road, I think 5 to 8 years later, China actually launched her own space station, and that's what the Chinese would do. So if US thinks that she can stop the flow of technology from China, what China will do is that China either would double down, okay, and develop from scratch, or they develop a new technology that will substitute the existing technology. Okay, and one of the leading technology that China now is quite ahead is actually in quantum technology. Okay, now besides curbing China's access to technology, US propaganda is hard at work to demonize China as a means to deter foreign investment into China and obstructing China's technology from gaining acceptance in the international market. So all this is actually propaganda war. Okay, it is very intense. Okay, because most of the news media like CNN, CNBC, BBC, all these are controlled by the Western nations. And therefore, it's very easily to influence the thoughts and minds of the general population. So US and China tech rivalry, I see there are 5 areas of intense rivalry between the two countries. First and foremost is AI. Then we have 5G, quantum technology, nanotech and material science, and then fintech. So these are the kind of segments in the industry that will actually shape the future over the next few decades. So why it matters who wins? Now, in the field of AI, both China and US are vying for the top spot. AI can alter the way we do things. In the professional field, AI is replacing humans in finance, legal, and diagnosis. In manufacturing, AI is enhancing self-learning to troubleshoot problems. AI will eventually be widely used in the military, including intelligence analysis, decision-making, vehicle autonomy, logistics, and weaponry. Unmanned drones, fighter and reconnaissance planes, unmanned boats and submersibles and tanks are the future. It could alter the way a battle is fought and won. And right now, we have Russia, China, and the US developing all sorts of military hardware that is aided by AI. To some extent, why is important? Because the cost to human lives. Okay, for example, between unmanned airborne vehicle, UAV, versus a fighter plane. Okay, a fighter plane would definitely cost much more than a UAV. So that's why, war in the future may be fought by UAVs rather than a fighter plane. And that is why, a lot of it is, it's just like something out of a Terminator movie in a sense. But hopefully, the AI is still controlled by human beings. So in terms of 5G, Ericsson estimated that the addressable industry digitalization market for service providers could grow to about 700 billion by the end of 2030. China's lead in 5G could invariably transform its digital industry further to make inroads into non-technology related industry. Now, one example is the application of 5G and IoT, Internet of Things, in household, which then create opportunities in the development of embedded devices and household robotics. The other one, okay, is also the applications of 5G in Internet of Things in industry. Right now, companies like Alibaba call the IIoT. Others call it the AIoT. What do this jargon means? IIoT is Industrial Internet of Things. which means using 5G technology to have overall control of embedded devices in an industrial place. Okay, and AIoT is artificial intelligence of things. Okay, so this is how this kind of jargons are developing within China itself. Yeah, China's industry could digitize exponentially, providing the competitive edge needed to surpass other country dominance in specific field. And right now, even as US could shut down Huawei, Huawei actually owns a lot of patents in terms of the 5G technology, and it cannot be. But I think the strategy taken by the US is to force Huawei into a situation whereby, similar to what happened in Toshiba during the 1980s and during the 1990s, what happened to Alstom. So what the US do is that they force the company, through various type of laws that the US impose, and then force the company to suffer huge losses, and then eventually to be sold to the US at a discount. And that is how Alstom eventually lost its competitive advantage to GE. Because at one time, Alstom is very, very strong in the power generation business. So eventually they lost it to GE. After US said that in order for after US forced the company to be taken over. So there's a lot of this kind of industrial actions being played out in the world, okay, and also industrial spying, espionage. Okay, for example, during the 1990s, US used their technology to spy on Airbus, okay, because both are actually competing for a large aircraft order. So eventually they managed to beat Airbus, and Boeing become the preferred supplier. So all this is still at play even to this world. Now, in terms of quantum technology can be applied in the sensing, computing, and communications segments. Its application in sensing improves accuracy and possibly allows for the sensing devices to be compact and consume less energy. Existing technology of a computer is rather limited. Scientists are now moving towards quantum computing, which could expand the computing power capability of the computer, especially in supercomputers. In communications, China went a step further and launched a quantum satellite in August 2016, which is said to allow for ultra-secure communications. Quantum technology is currently at the early stages of development, but once it becomes mainstream, it will open tremendous opportunities in the technology sector. Quantum technology will also transform AI to a new level. Now, also on top of that, China is developing quantum technology to the application of quantum technology in radar. Okay, because early belief is that quantum technology can actually detect stealth fighters. Yeah, so this is on the military side, and the US is also very much into this kind of development as well. Now, a lot of the big companies, okay, in terms of computing power, right now, NVIDIA, okay, the listed company in US, is one of the world leaders in terms of development of GPUs as well as AI chips, and they are really, really ahead of the game. Okay, there are also companies that are also entering into the Internet of Things. But in the US, the development of 5G is still in an infancy stage, okay, versus China. Now, in nanotech and material science, development of nanotech and material science can change the way and process of how a product is made. The application can alter the industrial landscape. Already in the field of medicine, nanotech is employed to deliver drugs to the human body. And this is being done by one Chinese company called Sino Biopharm. China recently discovered that by adding vanadium to steel, it can impact the steel's tensile strength. Now, this could impact the construction business because it actually strengthens the steel's strength, okay? And that leads to vanadium, which is previously rather unknown to being in the forefront of the steel industry. The impact of new materials can also be seen in new generation of fighter planes where the US is purported leader in stealth technology. And a lot of hype has been given to the US stealth technology, okay? And that is the advantage which the US feel it has, in a military conflict with any countries, okay? But sometimes, like in Russia, the Russian is more focused in developing missile defense system as well as radar technology, to overcome the effectiveness of the stealth technology, so that they would not be in a disadvantaged position. And in China, because China controls more than 90% of the rare earth production globally, and most of the patents that are related to rare earth production is also owned by China. And because of the importance of rare earth are actually used in very small quantity, but that small quantity can transform the way that technology is applied. For example, rare earth minerals are found in our mobile phone, okay? It's found in guidance system in missile, guidance system in aircraft. So China controls the global rare earth industry. And recently, the Chinese government has instructed that it's high time for rare earth minerals producers look beyond the production of just the rare earth itself, but rather to go upstream, looking into R&D, how to transform that product into a cutting-edge technology that will spur China's industrial growth. So this is also something that China has an advantage, okay, because it controls the rare earth market. Although rare earth is found very easily in Australia and in also US, but then the cost of starting a rare earth mining operation is very, very huge. It goes to millions, hundreds of millions of US dollars. So even that, the processes of rare earth often comes with a very toxic byproduct, okay? And strict environmental laws in certain countries may prevent that industry from taking off at all. US used to have a rare earth mineral company. I think it's called Molycorp. What it does is that it digs out the rocks and all those, but then production is sent to China, that they process and then they send back the rare earth. So it's very, very toxic, the byproduct. Okay, and that's why in Malaysia there were a lot of disgruntled people. When the Lynas rare earth processing plant was being built in Pahang. Okay, because it's associated with a toxic byproduct. So evolution of electric car battery, okay, has seen increased role of nickel and a reduced role of cobalt, which is less stable. Now, this is the chart of the number of patents. Yeah, breakthrough in nanotech and material science can give a company the much needed competitive advantage. And in this regard, both China and US companies are ramping up R&D. Presently, US and China holds the number 1 and 2 spots, respectively, as countries with the most patents. So here, US is leading by 55,900 over patents, and China is second at 53,300 over patents. So China is no longer the kind of copycat that the Western media continue to perceive. Okay, just because it happened in the 1990s to 20s, that narrative has not changed at all. But if we look at the amount of patents that is filed by China, it goes to show a rather different picture. Okay, as I mentioned, Huawei owns a lot of the 5G patents in terms of the rare earth minerals. China owns a lot of the patents. Yeah, but the United States is still a leader in terms of patents because their major advantage is that it's driven by profit, whereas China sometimes is driven by government influence. And as we all know, when governments start to put their foot into the private sector, there could be a lot of wastages. And in terms of time and in terms of cost. Yeah. So Japan is third, okay, not far behind both US and China as well, with 49,000 patents. Yeah. So in terms of fintech, the mastery of fintech allows the country to revolutionize the payment industry outside the prying eyes of other governments. Now, that is why you see there's a huge following in terms of cryptocurrencies, because for a lot of believers of the cryptocurrencies field, it is outside the influence of governments. For example, let's say Bitcoin. Bitcoin is only up to 21 million Bitcoins in the world. So they cannot, like, say, the Federal Reserve, I have the US government need to spend money. I'm going to need to print more money. So in that sense, as more money is entered into the system, then the value of that currency would depreciate. And therefore, a lot of people are saying, for example, the Fed is behind, don't worry about the stock market because the Fed is supporting the stock market. Therefore, buy and buy and buy. Okay. So, but then the more monetary, the more that the money is injected into an economy, the lesser the value would be the currency. And that is why from the dollar index, the DXY index, from 102 now has dropped to 93 point something. There's actually a debasement in terms of the value of the currency. Therefore, some people, believers of Bitcoin, says that, maximum is only 21 million. There can never be more than that. And therefore, the value of that cryptocurrency is preserved. Okay. But then, governments are such that when it is something that is outside their sphere of influence, you will see a lot of labeling. Okay. For example, Bitcoin is used for the black market, for money laundering, for drug money and all those two. Again, that narrative is being controlled. But then US dollar is also being laundered worldwide. Okay. Especially, in Afghanistan, where the opium has increased production manifolds. Okay. And it's being laundered in using US dollar as well. So this, and in Colombia, drug money is also laundered through US dollars. So does it mean that everyone should ban US dollars? No, it's just that something that is outside the sphere of influence, you will see that there will always be certain actions being taken to control the role of that particular currency. Okay, and in this case, cryptocurrency. So that is why I worry that eventually the world may evolve into two dichotomies of payment system. One that is crypto-based and the other that is the fiat currency based. But then, that will not stop the further evolution of fintech. So fintech also allows for the creation of virtual banks, which will revolutionize the entire financial and banking system and lead to the next stage of development in this sector. So in some countries, they do understand the role of cryptocurrencies, and therefore those countries are actually looking at ways how to protect the users instead of banning it totally. Okay. And in terms of virtual banks, okay, Hong Kong and Singapore are already starting their own virtual banks. And that is how the landscape will change in the future. And when virtual banks become mainstream, you will see that a lot of it will be a lot of transaction will be done online, okay, rather than going to a specific bank branch and all those. But then again, the rise of virtual banks will also lead to mass layoffs of people in the banking sector, because eventually AI would start to emphasize its role in the virtual banks. Okay. And, for example, you don't need a financial advisor anymore. If you want to buy funds and all those, you go into the virtual bank, you request information, and then, by setting parameters, then you have a chart, you have a graph, and telling you what are the returns and so forth. You no need to ask a financial advisor to calculate for you. Everything will be on screen and immediately known. Okay, and that is how fintech will actually change the dynamics of the financial sector. Presently, China is said to be testing her own unbacked cryptocurrency. Why I say unbacked? Because it's still a fiat currency. It's still the yuan digital currency. But there are talks that one day China will actually back its cryptocurrency with gold. And that is some of the fringe news. Okay, but this is not proven yet. But on the mainstream, both China as well as Russia has already come out stating that there is a need to move back to the gold standard. And coming this World Economic Forum in January 2021, they have a topic that will actually garner a lot of interest, because it's called the Great Reset. Okay, so the Great Reset may indicate, this is my own opinion, okay, they have not divulged anything yet, but I think it may set a deadline, okay, for the full implementation of digital currency, which means no more cash, okay, and that could be one of the things. And it could also be a reset of reserves currency, because countries now are voicing their concern about the US being the world's largest reserve currency, but they have unlimited money printing capacity. Okay, so this is what worries a lot of other participants in the global economy, because it's like, the US can actually keep on printing money, okay, keep on issuing that, just because they have the special status of a reserve currency. Then, of course, the development of government-led fintech is often controversial, as it allows governments to monitor transactions for taxation and money laundering purposes. So on the other hand, those people that are, into the mainstream cryptocurrency like Bitcoin, Litecoin, and all those, they do see that anything that is government-led will eventually lead to a divulging of privacy, of how a person spends his or her money. And eventually we may see two dichotomies in fintech, one led by the people and the other led by governments. So this is something that is just my opinion, but let's see, whether it becomes true or not in the near future. So US strengths and weaknesses. Now, development is driven by private sector, unhinged from government, although the case may be slightly different with regards to defense contractors. Therefore, companies are driven by market needs. Now, this is the major strength of US because it's driven by private sector, it's driven by profit, and therefore, the companies will employ the right resources, save costs, and reduce timeline to develop a product. So you can see that businesses form the largest contributor in terms of R&D. Okay, next is the federal, but the federal often is related to military type of military type of R&D. Okay, so environment is made conducive for startups to draw talents and funding. The high risk, high reward of tech firms achieving public listed status continues to play a major role in drawing talents and funding. Okay, but of course, SoftBank is actually very much a Ponzi scheme. Okay, where I'm concerned because for those who are unknown, a lot of the SoftBank's stable of companies, it's like every new issue is being led by SoftBank. Okay, and they pay a higher price for each issue so that they show that there's value creation in the companies. But it's actually SoftBank buying shares at a much higher price, and then they try to sell the idea to the investors. Okay, so that to me is a Ponzi scheme. Okay, and billions in R&D budget by giant tech companies to develop new tech to enhance global competitiveness, sometimes with grants from top university, grants to top university researchers in private and public sponsorships. Okay, and that's why there's a talk of now disallowing Chinese postgraduate studies to be in the research R&D sector. Okay, to be involved in the R&D sector because they worry that some of them may have linked to the Communist Party, and therefore they become spies. Okay, and they will actually steal the research in the labs as well as in the other research facilities. So this is what is being transmitted to the masses. Okay, that if we want to stop Chinese spying, is to stop Chinese students from being engaged in R&D works. So it has its good, it has its pro and cons, the way I look at it. Yes, some of them could be implants from China for espionage purposes, but some are actually really there to share their talents to encourage the development of new technology in the US. So actually, but right now, okay, because the US companies have billions of dollars to spend because of their global scale, then they actually have the right financing and the right attitude to develop new technology. Okay, and some of the world's top tech universities, of course, are located in the US, which continue to churn out some of the world's best scientists and engineers. So recent animosity towards foreign talents, now we are talking about the weaknesses here. Recent animosity towards foreign talents, especially Chinese scientists and researchers, could result in many of these scientists returning to their homeland or elsewhere where their work will be appreciated. Now, this could create a void which will be difficult to fill. Now, why do I say it's difficult to fill? And this is because recently the number of US citizens enrolled in STEM, science, tech, engineering, and math studies have dropped, and US continues to rely on foreign students intake. However, due to animosity towards Chinese students, some universities could see shortfall in foreign intake, which is also an important source of funding for the universities. So a lot of universities also rely on foreign funding, okay, through their graduate school as well as postgraduate studies, okay, to allow people to come in, okay, So when they spend their money for the courses, they also spend their money in terms of their accommodation, in terms of expenses. So this could actually, pull away a source of income to the US economy. But also, what is worrying is that there is a lacking number of US citizens now, and US own citizens enroll in the STEM studies. Okay, and by banning certain Chinese companies to conduct business in the US, it will lead to which will lead to restricting their access to US technology. It could force China to decouple from the US, thus potentially resulting in US companies being shunned and missing out on China's sizable market. Now, earlier I said that a lot of the global companies like Nvidia, Intel, all those, they actually have, they're also participating in China's growth. But if, let's say, there's a restriction from being a participant in China's technology growth, what will happen? Of course, revenue would fall. And when revenue fall, profit would fall. And therefore, the amount allocated for R&D would also likely to fall. So that's why, if they are no longer participating in a market that is, very technology driven nowadays, okay, you can see that in terms of technology usage, China is really very well ahead. Okay, right now we are still using credit card. They are using mobile phones to pay. Okay, by using QR codes to WeChat Pay, Alipay, and all those. So that is how it could impact the US, because once your major source of income is no longer there, then because company will always look at protecting its profit, and therefore amount that is allocated for R&D would gradually be reduced as well. So US companies, the other setback is that US companies recently have been spending more in share buybacks than on R&D. And in this sense, corporate greed has taken over. So we can see that why a lot of people say that COVID-19 is the source of the current economic crisis. No, it's not. COVID-19 is merely the catalyst that actually pricks the bubble of the debt-driven economy. Global debt today is almost close to 300 trillion versus a global GDP of around 80 plus million. So how many times of that is more than 300% already? Okay, so that's why ever since the dot-com bubble burst, US economy has been driven by debt. Okay, and whatever share price that rise, it does not rise in growth in total profit, but actually growth in EPS. So what's the difference? Because they borrow money to buy back their stock so that the number of stock in circulation reduces, and therefore it boosts the EPS. And Wall Street banks enable the process to be financialized by lowering the EPS expectation. So it is always an easy beat. So whenever they beat, the share price goes higher. So company continue to buy back shares so that eventually the CEOs and management or top executives who are paid in terms of share options are able to cash out. So actually, in terms of total net profit, the highest it ever occurred was, according to the S&P, highest profit ever generated was in Q4 2014. And since then, profit has never failed to beat the Q4 2014. I'm talking about total net profit. So you can see that a lot of all this is due to financialization, okay, of buying back shares, putting the shareholders into more and more debt, while the CEO, exercises their options and they become rich. So that is how, this kind of system has created a social burden on the people, because that eventually will be paid by, the Fed have to step in, buy back the debt from these corporations, okay, and then the debt will be paid by the taxpayers. So that is why, you see riots now in US cities and such, because of what you call unhappy people, disenfranchised people, that are not part of the economic pie. In fact, US middle class earners have actually fallen over the last few decades versus the 1% wealth which keeps on growing. So that is why there are riots now in US, because it's driven by a ever widening economic gap between the haves and haves not. So China's strength and weaknesses. Now, China's strength, development of homegrown technologies is given top priority by the government, including funding, especially in the field of semiconductor manufacturing, where China is estimated to be a few years behind the current known brands. Now, this is one article from Wall Street. China sets up new 29 billion semiconductor fund, and that is in 2019 October. So not only that, besides the semiconductor fund, one of China's top university, Tsinghua University, also have its own funding for development of semiconductor from scratch. And this is another article, stating that China said to be raising 47 billion semiconductor fund. So you can see that all these multi-billions are being channeled, and a lot of people are saying that, once the chips are gone, Huawei will be gone, a lot of Chinese tech companies will be gone. But I think, just as the case with the space station, it may not necessarily be impact China forever, because yes, China may lag further eventually, but I think it will lead to emergence of perhaps a new technology that actually performs much better than the current type of semiconductor. We don't know, but because of this funding, it has been able to draw talents worldwide. And that's why a lot of foreigners now are going into Shenzhen, which is the hottest technology hub in the whole of China. And just last year, the Nikkei Asian Review reported that China is offering 3 times the pay, of existing Taiwanese semiconductor companies to lure Taiwanese to move into China to help develop the semiconductor business. And apparently there were actually, I think, about 3,000 people, eventually went to China. So this is how, China, through its monetary resources, can use to attract talent. So China churns out more STEM graduates in a year than the US, providing a huge base for talents. Private-public relationship to speed up the development of new technologies. Now, this is being done just only a few years ago, because previously in China, the private sector will develop their own, the public would develop their own. But I think later on they realized that eventually both will be spending the money, developing on the same kind of solution, and that is wastage. So that's why the government then look at having private and public relationship to speed up development of new technologies, similarly like what is practiced in the US. So in that way, it can eradicate a lot of wastages and speed up the timeline. So China now takes second place as country with the second most registered patents behind the US. China is expected to outpace the US in R&D spending in the next few years. Now, this is from the Google CEO when he was interviewed, regarding by CNBC, if I'm not wrong. Due to China's 1.4 billion population, she has a huge database for development of AI. So that's why, how AI becomes efficient is by learning, because AI is self-learning. And you have more data for the AI to actually decipher and to make adjustment accordingly. And the statistics would be more accurate because of the wider population. So China lead in 5G will spur development of new technologies to meet consumer and business needs. China recently revamped her policy on IP protection, and this could help encourage foreign tech investment. So China right now is moving away from the previous, whereby yes, there's a lot of copy of technology and all those, because suddenly those workers, executives who work for a foreign company wants to be their own boss, their own CEO, so they bring the technology along with them. Okay, but then because China's rise in number of filed patents, Chinese government right now also worry that other people will steal their IP. And that's why there's a changing tone in China, that right now they see the importance to protect IP, because otherwise you won't encourage foreign tech company to invest, or foreign talents to come into China to develop, because if their IP is not protected, then there's no incentive. So that's why, this is being revised, which I think will be a good step forward. Now, in terms of weaknesses, starting from scratch is never easy, as it consumes capital and time. As China attempts to delever from the US for technology supplies, it may take much more capital and effort before China achieves what the US has achieved. And this is always a very time-consuming effort. Not only time-consuming, but also financially consuming. So whether that kind of money is put into good use remains to be seen. Okay, when tech development is government-driven, with little accountability to profit, it inevitably leads to wastages and leakages. China may not have access to important patents vital to a tech industry development if the US decides to limit their accessibility to China. So what the US is doing right now, previously they restrict or ban the sale of chips to Huawei, okay, for example. But right now, they actually extended it to anything that has US design architecture or US manufactured equipment is not allowed to sell to China. So that means, countries like even TSMC in China, in Taiwan, is looking at stopping all sales of microchips to Huawei. I think sometime in October this year. Okay, because the architecture of that chip, okay, originated from US. So even equipment, okay, for example, Norway actually supplies some equipment to manufacture semiconductors, because some of the equipment itself uses US chips. It is also not allowed to, they actually suspended the sale of the equipment to China. So it's not easy. It's going to be an uphill battle. But through time and through the vast talents that China has, and also the vast financing, I think it's just a matter of time where China will be able to come up with a solution, because of the never say die attitude. Okay, and I often relate it to something that, what if something is, China comes up with something that revolutionized the chip industry, then China would then have the patent for it. Just like China, out of nowhere, Huawei suddenly become the leader of 5G. So I wouldn't write off China because of its huge capital and talent base. And I think it's just a matter of time. Now, China's continued support for state-owned enterprise SOEs can deter entry of foreign tech companies into the market due to unfair competition. Now, to this day, okay, China government tend to provide the kind of funding to the SOEs. And if you are a foreign company, you come into China, then you see that, your source of funding, you have to raise it through banks and all those. But the government is giving money to the SOEs to start off ahead of you. So that is something which I think, if China doesn't overhaul the state-owned enterprises, it will continue to be a hindrance to new investment into the Chinese market, new foreign tech companies coming in. Okay, and if they overhaul the state-owned enterprise, then it must be done, okay, through a proper network of accountability. because there's apparently a lot of wastages also among the state-owned enterprises, and this is one of the major weakness. So even as, let's say, 100 million goes into it, what comes out may be 60 or 70 million, okay, because of 30% wastage. Because when it's not driven by, when it's just like, taking something for granted, okay, but they don't see don't really emphasize on accountability because it's easy money, then it could lead to failure of certain ventures. And in China, there's a lot of failures as well in terms of property development, in terms of even certain electric car development. Okay, a lot of hype, but eventually nothing comes to being. Okay, and then money is wasted. So these are China's major weaknesses. So US tech companies, what to look out for? Now, I will look at semiconductor companies which will boost the AI capacity. In the lead is actually NVIDIA, okay? But right now, the US technology market is overvalued, the way I look at it, because the NASDAQ keep on pushing higher and higher, okay? And then, it's just defy gravity. It goes to show huge overvaluation. And therefore, if I won't invest in US companies, but I don't mind trading in US companies, okay, because of the huge valuation, because it doesn't allow you to hold for long period, okay, but it's good for trading. But NVIDIA, I actually recommended NVIDIA way back in 2019 when it was just 200 plus. I think to date NVIDIA is 400 plus. So I think I would look at further correction in the NASDAQ before going in again. NVIDIA is actually one hell of a good company. Okay. Then professional services firms employing AI, big data, and cloud capacity to deliver top-end solutions to consumers and businesses. This include finance and accounting, customer services, and diagnostics, to name a few. So there's a number of these companies in China, in the US, okay, for example, Intuit, Salesforce, and such. But again, you need to look at their valuation. Companies involved in the development of 5G technology in the US. Right now, there's no clear-cut winner, although companies which manufacture embedded chips for IoT functions, both for consumer appliances and industrial equipment, yes, there are a few. Okay, I think one of my favorite will be Adesto Technologies. Yeah, it's a very small company, and the shares is just hovering, I think, less than $20. Okay, but these are the type of companies that I don't mind investing in, because it's a very low base, but the potential of IoT is huge. So therefore, I don't mind investing in this kind of companies. So companies providing supercomputing and cloud services, including those providing data storage facilities. But I think right now, most of them are overvalued, whether it's IBM, Amazon, Microsoft, and such. Okay, they are hugely overvalued. And therefore, trading opportunities, maybe I look at if, let's say, the NASDAQ have corrected significantly. But for long-term investment, I think I still prefer very low cap based companies because the potential gain is much higher. Companies involved in the development of robotics and manufacturing and defense. Okay, there's a few there. Okay, robotics, I think for consumer, one of the popular one is iRobot. Okay, companies involved in the development of cutting edge technology for medical and healthcare technology, healthcare industry. I think in terms of in the healthcare, I think with the COVID-19, a number of companies have already sprouted out. Okay, you can do your own research on some of these companies. Okay, but I think stay away from Moderna. Okay, Moderna is one of the lead companies in terms of the vaccine development. But Moderna's management has been indulged more in selling shares and making new placement of shares than actually focusing on the development. Okay, companies involved in the development of mobile apps. These are the kind of companies that you should also look at, which have potential to grow because of the user base growth. So Chinese tech companies to look out for. semiconductor companies, especially since they will receive the bulk of the funding from government. Now, two of the top companies I do look at is Hua Hong Semiconductor as well as SMIC. I think I recommended these two companies in 2019. I think SMMC has at the time I recommended was around $10.70. I think Hua Hong went all the way to reach about $42 or $45. Okay, but since then has come down. Okay, I think it's in the 20s right now. Hua Hong, I think I recommended it around when it was in the teens, but it went all the way to the 30s. Yeah, but I think these are the companies you can invest again. You can invest in when you know there's certain correction. You can actually look at them. Companies involved in the development of rare earth technology, as part of the value creation earmarked by the government with regards to the rare earth industry. Okay, companies involved in fintech industry, as China is seen to be the first mover into a full-fledged digital currency economy. I think when we look at it, WeChat, which is owned by Tencent, is really very highly valued. I think one of the things to look out for is maybe Ant Financial's IPO. Okay, that may see it being a huge competitor to WeChat Pay. Yeah, companies which are developing the 5G ecosystem, including those in the development of consumer IoT appliances and IIoT, industrial Internet of Things equipment. In this regard, there are a number of companies, but most of these are quite small. But one of the better ones are in the but lately, because a lot of the chips suffer a huge oversupply in 2019, a number of these companies actually are showing profit growth that is negative because of the oversupply of chips last year, and therefore their revenue and net profit also dropped. And also in Q1, because of COVID-19, most of them also suffered huge losses. So I think this one this one you have to do your own research, okay, to find out what are these companies, because I don't see currently any of them as investable at this moment because of huge fall in net profit growth. But you can actually look at them. Most of them are actually in the gem market in Hong Kong. Okay, you can look out for this, and these are the companies that being young will actually have the kind of capacity to grow much larger when the industry matures. So companies involved in the development of robotics for manufacturing and defense. Okay, one of the companies that is involved in defense is actually Chengdu ALD. I recommended the company in 2018. At that time was around 20 over renminbi. I think right now Chengdu ALD, which is involved in the development of the J-20 fighter planes here in China. I think Chengdu ALD now has reached about 45 or 46 renminbi. Again, these are the companies that this is one particular company if you are interested in the defense industry in China, okay, that you can look at. Companies involved in the development of cutting-edge technology for medical and healthcare industry. There are quite a number, okay, and these are the ones that are, one of the widely mentioned one is CanSino. But then the share price is already very high, okay, $270, because of them being one of the leaders in the COVID-19 vaccine. Then, of course, there are also certain companies like the Beijing Genetic. I can't recall the company name. I think it's Beijing Genetic. The names can't slip my mind. And the other one is Hualon Manufacturing, Hualon Bioengineering. Okay, these are the companies that are in the in the healthcare and medical technology. Okay, of course, the other one is Woozy AppTech, which I recommended early this year, and already up about, I think, 20 over to 30%. And companies involved in the development of mobile apps, I think there are plenty which you can search around. Okay, so these are some of the hints of companies which you can look at. Okay, and now I return the presentation back to Shane. Shane, back to you.
Thank you, PC. All right. So as you I think PC did a wonderful job to dissect with us the what is happening now at the US-China relations. And as you've seen, some of the companies that PC shared just now, where we can look into for opportunities, is very exciting. Is in a very exciting phase, because in Malaysia we do have companies that involve in this kind of forefront upstream level in terms of technology. You know, in Malaysia, what technology companies we have are usually in the midstream and downstream. They are they are contract manufacturer for chips, and then they are like AT providers doing the automatic test equipment, as well as to do the EMS, electronic manufacturing services. So if you want to invest in high tech companies that involve in chip design, in software services, in cloud computing, then we could look abroad for these kind of opportunities in terms of biotech, nanotech, and also defense. So let me sum up with what are the strategies that we have now. I think how do we invest is, personally, PC and I, what we do is we do a top-down approach in investing. Number one, we look at the world economy as well as the local economy. We want to know where is the big direction, because if we know the big directions, we'll be able to pick the right trend, and we just ride on the trend, and we can make an explosive profit if we pick the right trend. And if ideally, once we identify the economy, we drew it down to the sectors, which sectors likely to outperform in this kind of macro economy situation. For example, in this period, what sector is really hot? I guess many of you would know it is the glove companies. Okay, I think the healthcare company in Malaysia has already made headlines, even on the foreign media, that our healthcare companies, our glove manufacturers are making a 1,000% return in a short few months period. So, see, we identify the big trend, then we look into the sector that are likely to outperform. Then we go down to the industry that will benefit from this, from the big economy to a sector to the industry. Like, for example, in healthcare sector, there are pharmaceutical, there are glove manufacturer, there are hospital companies. So we drill down to the industry that will benefit. Then we pick the best performing company in this industry, or the company with the best potential for growth. So this is what I would recommend all of us need to follow. Okay, so we look at the top-down approach when it comes to investing. What we would likely suggest to you is, look at the top-down approach, understand the big picture, then drill down to the sector that will likely to outperform in this economy, then go down to the industry and pick the company with the best potential, or pick the company which is the market leader and have a strong economy moat in that industry. So this is our summary of our investing strategy. And so what we need to do is we need to follow the trail of the trend. Okay, you must know where the hot money is flowing to right now, which sector has the highest potential, so we have to follow. Sometimes it doesn't happen in Malaysia, but it happens in other part of the world. So that's why sometimes you have to look abroad when we want to participate in this growth. For example, some exchange, some stock market are trading at below their mean PE, whereby some markets are trading at above the mean PE. For example, in the US, where the valuations are really high, and I think today the market closed down a little bit when the GDP data came out, contracts for 2%. So in companies such as in China, where the valuations are still pretty low, then that present an opportunity for us to invest, not trade, but invest and hold a pretty long term. So this is sometimes we have to follow what sector has the highest potential, and sometimes the sector doesn't happen in Malaysia. So why should we invest and diversify abroad? So if we compare Bursa versus foreign markets performance, we will notice that the red line is the one that is the S&P 500 is for the past 5 years, S&P is up 51%. Whereby we look at in Europe, which is represented by the orange line by Germany, DAX is up 10% over the past 5 years. If you look at Hang Seng, which is down 1% over the past 5 years, and if you look at Malaysia KLCI, we are actually down. We're actually down 8% over the past 5 years. So this is what happened. If you benchmark our return versus what is happening in the world, we will notice that our Malaysian stock market return, may not be as lucrative as what is happening elsewhere. Okay, if you invest abroad, then the returns that we get will be higher than if you invest in the local market. So this is the data over the past 5 years that I want to share with you. Now, the world is moving towards an economy reset where the balance of power in trade and commerce and perhaps even finance is shifting from the west to the east. I think we are living in a very exciting time. We were born in Asia, and right now we are seeing that the power is being shifted from the west to the east, where east are becoming increasingly more influential in the world stage. So when there is a downturn in the sector, there will be an upheaval in another, and there's a wealth transfer in the making, and it will provide tremendous advantage to those who are able to discern the opportunities. So if you see that gold prices are going higher and higher, and if you look at who are the buyers, it's coming from the east. Okay, who are the sellers? It's always coming from the west. So the east, for example, China, India, and Russia are stockpiling all the gold. And this was very different during the World War II, whereby the West, like US are accumulating gold, but right now, countries in the Western countries are selling gold and to the countries from the East. So there's a coming transfer of wealth. So if you are able to take advantage of it, look at the macro picture, take advantage of it, then we'll be able to find all these opportunities and the sectors that we can invest in. All right. So I think today we have done about 1.5 hours with you. And right now, we have an exciting offer that I want to share with you. If you feel that we have added value to you over the past 1.5 hours, so we want to invite you to hear our stories about this program called Macro Investor Program. So we want to share with you about this program. If you find value in it, of course, right now we have quite a number of our students who are from Macro Investor Program who are tuning in right now. So for those of you who are not our students, we want to send an invitation for you to join our program called Macro Investor Program, whereby we will discuss sector rotation strategies across 4 different economic cycles, and then we will review to you how we can use it. So as the word suggests, macro, that means we look at this program focus on how we can look at the macro picture and then find opportunities. So PC and I spent a lot of time into refining this program and to make it as impactful as we can. Of course, PC will be the lead trainer and I will be the assistant trainer in this program. All right. So before we talk more about our program, I will want to share with you some of our results. So we have invested in PC have invested longer than me in the worldwide market, and so some of the result is that Jin Chuan International, we bought 13,000 shares at about 1,004 Sing dollar on 16 January, and we sold 13,000 shares of Jin Chuan for 2,001 on 9 March for 49% profit in 2 months. At the same time, Sing dollar also gained about 1% against the ringgit. So we also invested in Barrick Gold, bought 500 shares of APX at about 5,001 Sing dollar on 6th October, and then we sold 300 shares of APX at about 8,003 for about 135% profit in 10 months. We still have 2,000 shares to spare, and in the same period, Sing dollar depreciated against ringgit by 2.9%. So this another success cases is the Hopewell Infrastructure. This is the infrastructure company listed in China. So we bought 20,000 shares of Hopewell at 12,000 Sing dollar on 16 December and 17 January respectively. So these are some of our transaction statement. As of 13th September, the valuation stand at about 16,000, equivalent to a capital gain of 35%. And then we have also received 4,006 4,600 Sing dollar in dividends, or 38% in initial capital investment. In the same period, Sing dollar also gained about 21.3% against the ringgit. So that's why you see we also have a currency appreciation. So we also invested in Factors Gold Miners ETF. We bought 200 shares at 3,009 Sing dollar on 13 January. And then as of 14 September, the ETF valuation stands at approximately 6,005, giving us a 64% return in 1 year and 8 months. In the same period, Sing dollar also gained about 2.6% against Malaysian ringgit. And the last case I want to share with you is UK oil and gas. We bought about 150,000 shares of UKOG. This is in UK with 2,600 Sing dollar. And then we sold 100,000 shares of them for 8,003 on 19 and 24 July for 372% profit in 2 years and 4 months with 50,000 shares to spare. So these are remaining shares. In the same period, Sing dollar also gained 16.5% against Malaysian ringgit. And then finally, we sell 20,000 shares of UKOG for 3,001 for about 788% profit in 2.5 years, and then with 30,000 shares to spare. In the same period, Sing dollar also gained 16.4% against the Malaysian ringgit. So these are some of our results from our investing. So to share you more about what you will learn. Okay, now this is about what you will learn. What you will learn in this macro investor program is you will understand economic trend and how to interpret economic data. And then secondly, you will learn how to compound your return in any economic situation, whether it is in an expansionary phase, in a slowdown phase, in a recessionary phase, or in an economic recovery phase. We will share with you what you should do in each economic cycle. Okay, what sector to go into in each economic cycle, and how we can have a recession-proof investment growth, and finally learn how to protect our asset and hedge your risk in a global financial crisis or even global currency reset. So this is what the program aims about. So who is this for? This is designed for working adults with capital to invest, business owners or experienced investors who want to diversify abroad. So most of our case studies is our case study in overseas companies, especially in the US, and also anyone who want to create wealth in the worldwide market. So this is what it is meant for. So let me walk you through what are the modules that we will cover. These are all the pre-recorded modules, so you can watch it at any time convenient to you. So in module 1, we will talk about global economy and emerging markets outlook, so that you can understand the big trends and invest in the sectors that are likely to attract the hot money when the next paradigm shift occurs. So this is module 1. We will talk about global economy and emerging market outlooks. So and in module 2, we will talk about economy masterclass, because sometimes economy could be very deep. Okay, so in module 2, we will attempt to share with you every indicators that we know, important indicators, so that you can understand every single economic jargon, where to source the data, and are able to make sense of any economic trend and ultimately see the opportunities. Okay, so after this module 2, when you read the economy report, you'll be understand what does that thing mean. So that is module 2. In module 3, we'll talk about the power of ETF, so that you can understand how to utilize this powerful tool to long and short the market with ease. Of course, our case studies more are the US ETF, because they are more liquid. In module 4, we will talk about strategies in economic slowdown, so that you know how to short sell, learn what asset class to invest in an economic slowdown, as well as strategies to make money. So this is module 4. We'll share with you in economic slowdown what sector you can look at and how you can do short selling using some of the tools that we discussed. In module 5, getting started in global investing, so that you know how to trade global stocks, learn different brokerage platforms, and exchange information. In module 6, we'll talk about strategies in recession, so that you know how to make tons of money rapidly in a fast recessions. In module 7, we'll talk about strategies in recovery, so that you know how to pick up cheap, undervalued stocks in a recovery that can give you high dividend yield. In module 8, we will talk about strategies in economic expansions, so that you know how to ride the trend in the bullish market and make massive capital gain. So that is our objective in Module 8. So as of from Module 4 to Module 8, we have covered different investing strategies in different economic cycle, and each cycle, some cycle lasts 2 to 5 years, some cycle lasts 6 months to a year. So that's why the strategy is a little bit different when it comes to different economic cycle, and then the sectors that we look at is different. So you'll be able to make money in the bullish market, and you'll be able to make money as well in the bearish market. So in Module 9, we'll talk about global shares and sector rotation strategy, so that you know how to follow the flow of money to sectors and markets that are likely to outperform. We talk about markets in Asia as well. So in Module 10, we'll talk about portfolio construction and money management, so that you can manage your capital and portfolio effectively and learn how to hedge your positions. Okay, so the total value of this program is $1,997, and this give you more details. The duration is about 10 online modules. You can watch it anywhere with good internet connectivity, and PC and I co-trainer in this program, whereby he will do 70% of the module and I do 30% of the module. So why is it different? Because not many programs in the market talk about sector rotation. I guess we are one of the few, if not the only one, that covers sector rotation in different economic cycle, and what sector we can look at, what asset classes we can look at. We go beyond only the stock market. We go beyond the stock market to look into the bond market, to study about the commodity market. So this is what we attempt to share with you. We not only teach you how to become a stock investor, but we teach you how to become an investor. Okay, not only stock investor, but investor across multiple asset classes. Okay, we look at sometimes which sector you can, which time you can look at bond, high yield bond, investment grade bond, and which time you can look at commodities. Okay, and how what's the correlation between commodity and the stock market as well as the bond market. So we all dissected in our macro investor program. So here are some of the case studies from Wilson. He is from KK. He said that this program is very unique, that it teaches us sector rotation that you can't find in any other investing programs. Shane is a good trainer that always ensures that every participant understand what is being taught. I would recommend this program to anyone, whether you have any investing experience or not, as he has helped me to discover new strategies in my investing journey. He's a cafe owner in KK, whereby he also took me to his restaurant on one of my visits to KK. Okay, so Wilson, case study number 2 is Carol. He is from South Africa. He's a South African, but he lives in Malaysia right now. So this program answers a lot of my questions that other tutorials and gurus haven't been able to answer. I'm now more confident to invest in the stock market, and I would highly recommend others to join this program with Shane and PC. So not only our program has worked for us, he has also taught our students how to make money in the market. So the third case study is from Seng Kwan. Okay, he also make about 26% return in 3 months by some of our companies that we cover in our program. He learned about that, and then he also invested along with us. So he also makes money from our program. So case number 4 is from Shu. So she joined our program. Let me refer. I joined your program a few weeks ago. After learning from you and applying your KPI and selecting the stock, I invested in an undervalued company and get a 13.4% return in a short 5 weeks. Thank you so much, Shane and PC. So she just dropped us an email to thank us for that. All right. So here are some of our student successes, and I want to share with you that we, beside our main program, we also have come with bonuses. Okay, for bonus number 1, you can join our Facebook and Telegram community with weekly economy update. Every week, we update with you what is happening, what we see is happening on the macro stage. Okay, on the macro stage, where we talk about geopolitics, we talk about economy across different sector. Okay, it is also available on Facebook, because some of you say you don't have Facebook account, so we started a Telegram group. You can also join our Telegram group. Okay, so we have a Facebook and Telegram community with weekly economy update. If you have no time to keep yourself abreast of the latest development on a global stage, you just read our every weekly report. Okay, it's valued at $197. So what happened is that one of our students said that thank you Wong for sharing such accurate predicted with your well-supported research facts. Okay, so this is one of our student testimonial. So bonus number 2, aside from the Telegram channel and also our Facebook group, you can also get a 6-month Inner Circle subscription. So Inner Circle subscription is our our close group for our Inner Circle members. So you can join, you can get a 6-month Inner Circle subscription, which have our stock research and our alerts. So this is valued at $582. So let me just share with you what is Inner Circle. When you join, we will give you the email alerts. So we will give you email alerts to what we feel is urgent. You must urgent look at, because there are opportunities that is coming and there's time sensitive. So we share with you some of the urgent call in regards to some of the companies you must look at, or some of the companies where you think that you must sell. Okay, so we'll give you email alerts, and we also cover stock picks. So every month we will do 2 to 3 companies. Every month we'll study 2 to 3 companies to share with you what are the exciting companies that we look at potentially can benefit from this upcoming trend. So every month we will do a webinar to share with you what are the companies that we look at. Okay, this is our premium equity research that you can access to. So if you are, we want to help more of you to get started, because some of you investing abroad looks like a very daunting task. Okay, so in our macro investor program, we teach you how to fish. But in our Inner Circle, we also share with you some of our fishes. If you've got no time, then you can look into our Inner Circle program to get some ideas of companies that we are currently looking at right now. So as of the result, okay, I think many of you want to ask, I'll give you result from April 2018 to December 2019. So for 1 year and 9 months since April 2018 to December 2019, so April was when we started, the total stock picks we gave is about 78. Total gainers, okay, we are very sharp this time, okay, 82.1%. And then out of the 82.1% that makes money, 2 make more than 100% gain, 7 make about 50 to 99% gain. Biggest gainer is 115%, where the biggest drawdown is negative 50% in one of the oil and gas stock. Okay, so not every company we share is successful, but we actually have quite high winning rate. 82.1% is successful cases. So here are some of the notable gains from April 2018 to December 2019. So some of the companies you see here, right, like First Majestic Silver, China Comservice. So we shared quite a number of Chinese stock in 2018 to 2019, because we cover Make in China 2025. What are the companies that can benefit from Make in China 2025 in our Inner Circle program? So we cover quite a number of Chinese companies, and then since then they have up substantially from advanced semiconductor manufacturing coal up to 82.9%. Okay, Chengdu, just now PC mentioned about the defense company that manufactured the J-20 fighter jet. Okay, it's up 34%, but of course now it's up even higher. So this is updated as of December 2019, the result. Okay, AppStar, okay, is up 28%. Meituan Dianping is up 114%, but now it's up already 300%. Okay, Meituan Dianping, when we first covered that, it was really, really low, and right now it's up already 300%. Okay, and some of the Pan American Silver is listed in the US, Metalla Royalty is listed also in the Western countries. So we cover both a US company as well as a Chinese company that are likely to outperform. Here are some of our notable gains. And sometimes when you see there's a bearish market, we'll share with you some of the inverse ETF or that you can look into. So when there was a meltdown in November 2018, we suggested a few inverse ETF that you can look into, and then most of it here actually make quite a number of money, decent money. So up 5%, 3%, 6%, 4%, 7% in the short period, and also up 11% in 8 months, 50% in 8 months, and 5.2% in 8 months, and so on. So these are some of our results. So of course we also have a fair amount of losses, so I need to be fair, not only to show you the success cases, I will also show you some of the losses. For example, Water Health is a Australian company, it's on milk. Sinopec, okay, this one of the largest state-owned enterprise in China. Okay, and McDermott, this is the one that we have the largest drawdown. This is an oil and gas company that's serviced the the Shell Oil Company. So when Shell Oil Company go bankrupt, their clients cannot pay them, so they were actually down. So China is also Jacobson Pharmaceutical as well as Sino Biopharmaceuticals. So here are some drawdowns as of December 2019. But also let's look at the this year performance. Okay, this year from January 2020 to July 17, as when we did the slide in July 17, we have covered about a total of 28 stocks as of this year. So with the date also and some of the stock that we cover, and I'm delightful to announce that for this year we are actually up 28.73% for our total entire portfolio of 28 stocks. We are actually up 28.73% versus S&P 500 that were down about 4.84% year to date. From January to July 2020, S&P is down 4%, but then our return is up 28%. Okay, so total stock gain is 68% of the stocks that we share is actually gain in value. So as you can see, if you can manage a portfolio of 28 stocks and can still deliver a 20% return, which is also a fairly remarkable result. Okay, this is assuming each stock we invest in is in equal weightage. Okay, some are listed in Hong Kong, some are listed in US, some are listed in the UK, some are listed in Malaysia, and so on. All right, so this is our result. 68% of the stock they've covered this year gain in value, and then total return is 28.73% versus the S&P 500 year to date is down 4.84%. So that is about some of our track record. And when you join our macro investor program, you get 6-month complimentary subscription to our inner circle, where we share every month a webinar, research about 2 to 3 companies that we feel has a potential to gain in this upcoming trend and cycle. We will also send email alert to you so that you know what are some urgent buy or urgent sell that you can look at. Alright, so bonus number 3 is you can get unlimited access to lesson with periodical updates. So every time we have economy update, we will record a video and put it up on our membership site. So there will be a lot of bonus videos up there so you can watch to understand the upcoming things. So every time when we have new content, we put it up on our membership site. So this is a bonus number 3. You have unlimited access to lesson with periodical updates that is worth $297 US dollar in value. So let me start out what you're going to get. Just give me another 10 minutes, then I will conclude. Okay, so macro investor program is about $1,997 US dollar in value that will give you access to 10 modules, and then 10 online program that will teach you strategies, sector rotation strategies in these 10 modules, and also across multiple asset classes. Bonus number 1 is we are going to allow you to join our macro investor program Facebook and Telegram community with weekly economy update that's worth $197 in value. Bonus number 2 is you're going to get 6-month inner circle subscription that's worth $582 in value. So this 6 months we will share with you stock picks that we think is worth to look at. Bonus number 3 is we're going to give you unlimited access to lessons with periodical update, $297 in value. So total value is $3,073 US dollar in value. But I'm sure you all will expect a more affordable price. Of course, we are not going to price this at $3,000 over US dollar in value. And today, because you are showing up in this webinar on this Facebook Live, we want to give you a huge discount. Okay, we're going to give you a huge offer so that more of you can join our macro investor program. So listen closely, the discount that we'll give is about 90%. We're going to give 90% off to our this macro investor program. So what you're going to get today is you're going to get is only at 1297 ringgit. In USD is about 297. Okay, so in USD is about 297, and in ringgit is about 1297 ringgit. Okay, if you miss the promotion period, then you're going to get 1597 ringgit. Okay, so if you're ready, go to www.macroinvestorprogram.com/go. That is how you can enroll yourself into our macro investor program, where we talk about the big macro picture, and share with you what are the sectors that are likely to outperform. Okay, go to www.macroinvestorprogram.com/go. If you're ready, just know you can exit this webinar open a new browser, okay, type in www.macroinvestorprogram.com/go. That's how you can enroll into our macro investor program. Now, just 5 more minutes. Okay, let me just do some concluding remarks, okay, and recap. And let me ask you a questions. Now, if Warren Buffett is willing to pay you $10 billion to trade with your age, would you be willing to do it? Now, this is a question that one of our mentors posed it to me, okay, way back. Okay, if Warren Buffett is willing to pay you $10 billion trade with your age, would you be willing to do it? Okay. Yes or no? Okay, I think for me, I would definitely say no. Okay, of course, if you are 90 years old, you trade with you 90 years old, then of course you will be willing. But for me, who are like 30 over years old, if Warren Buffett pay me 10 billion, to me, I think it's not worth. Because why? Because time is more important to me. Because time never replenish. Okay. Now, Warren Buffett, if he give you 10 billion, can he still rebuild himself? Definitely yes, right? Because why? He has the knowledge. He has the knowledge. He has the skills. So when he swap with you with your age, right? When he start over from 30 years old, 40 years old, he got so much more knowledge and skills, and he'll be able to rebuild his wealth to become, world top 5. Okay, and to him, maybe 10 billion is just a drop in the basket. Okay, now, but if you get 10 billion and you're 90 over years old, what good does it do to you? It doesn't do any good to you, right? For me, what is important? Time is very important because time never replenishes, and money is just a tool. Money is just a tool that will replenish every other month. For most of the people, we are like working professionals. We work for a paycheck every month, and every month, right, our money replenishes. Okay, so the key is how you're going to use this money. Okay, every month, the rich use this money to invest into asset, to invest into knowledge, to invest into things that give them value. But if you are not using this exact same money management strategy, every month the surplus that you have, every month when money replenishes, every month the surplus you have go into liabilities, go into entertainment, go into things that do not give you value, will not bring you tangible result, then chances are you will not be able to grow your net worth. So at the end of the day, it's how we manage our money is that determine whether we are rich, poor, or middle class for the rest of our life. So for me, because time is very scarce, I always use money to buy people experience. I've joined many programs. From different assets, from financial derivative, how to invest in, how to trade futures, how to trade options, how to trade the Hong Kong market, how to trade the US market. So I've spent tens of thousands of ringgit, okay, to learn. Because what I want is I want to accelerate my journey, okay, to become a successful investor. So I'm willing to use a small amount of money to buy people experience, so to avoid some of the mistakes that I would have made. So I want to encourage you to do the same, because time is very scarce and money is just a tool to help you to reach your goal. So if you not invest in this program, what you have spending, okay, you probably spend 1,297 for 1 month car installment, and I want you to compare it versus an investment now that can fit you for a lifetime. Okay, if you acquire this skill, you'll be able to see the market differently and know where exactly you should park your money in which asset classes. So information alone can't ensure your success. You need to take action. So if not this program today, what is, okay, if not you, then who? Okay, if not now, then when? So this is a question that we need to ask. So what you're going to get, let me sum up one more time, is you're going to get the Macro Investor Program 10 module that will share with you how you can invest in the global market using our sector rotation strategies in different sectors and into different asset classes. In Modus 1, you join our Facebook and Telegram community with our weekly economy update worth $197 in value. Bonus number 2, you'll get 6-month Inner Circle subscription whereby you can join our premium equity research group, so you know what stocks that we're looking at that particular month. And in bonus 3, we will share with you the periodical access to our lesson with periodical update, so $297. So not only you will learn how to fish in this program, we will also share with you some fishes on a monthly basis, all right, to get you started. So total value is 3073, and then today only is 1297 ringgit. Okay, so sign up now today, at www.macroinvestorprogram.com/go before 11:59 p.m. to get our offer price 90% off. Okay, now, so some of the frequent, this is my last slide already. So some of my frequently asked question is, Shane, what are the likely results that I can achieve? So if you follow our macro investors strategy to invest in asset classes and also stocks that have high growth stock and also performing stock, we are looking at about portfolio gain about 20%. So this is what we look at. As what we have shared with you this year, we have achieved about 28% through a 28% to our 28 stock. So we have a 20% return. So this is the result that you can likely achieve. Of course, different students have a different result. Some of you join the program, never take actions. Okay, some of you take massive action, and then you will be able to get the result that we look at. Okay. If I'm new to the foreign market, is this suitable for me? Of course, if you're new to the foreign market, you can also join our program because we will guide you one step away on how you can look at the macro, how you can look at the global market, so that you'll be familiar with the things happening in the foreign markets. All right. So these are our frequently asked questions, and I hope that today you learned as much as I do. Okay, in our how to profit from US-China tech war webinar. Thank you so much for tuning in until the end of this session. So of course, if you find value, I hope that you can also join our macro investor program, and I hope to see you in our macro investor program community. So if you're ready, go to www.macroinvestorprogram.com/go. That's how you can get access into our membership site and join MIP as a member. Okay, so see you in our program and have a pleasant rest of the day. Okay, for those people who want to enroll, we are here to answer your enrollment questions. Bye-bye.